Hi, this is Randy Finney with the Right Side of the Chart, and this is a mid-session update for Tuesday, July 6, 2021. What we're going to do is start out with the broad markets and then look at a few other individual stocks or sectors that may have a bearing or an impact on the broad markets. Then we'll do an update on gold, silver, GDX, the US dollar, and then some of the commodities I've focused on recently, such as lumber, wheat, crude oil, and then finally I'll do a quick update on AMC. Don't know why, but I'm just keeping that one on my radar. It's pretty much the poster child of the meme stocks at this point in time. So we'll watch that one. All right, lots to cover. Let's dive into it. All right, SPY S&P 500 primary uptrend line off the March lows back here, March of last year, 2020. That's already been taken out. We've kind of limped along sideways. About what was it, a week or two ago, right about here, somewhere. Figured that we might see a top in the market. Well, so far wrong, but not by much. We went up from that high a couple weeks ago. We went up about 1.7% or so, and there's mounting evidence of a major, tradable top. What's one of the things I'm looking at? Let me talk about that real quick. All right, and usually what I like to see for a tradable correction, meaning at least, well, let's just say a double-digit drop. Let's call it that. I like to see a couple things in the charts. Number one, I like to see divergence, negative divergence, and what you'll see here is to get that negative divergence, you'll usually see it off overbought readings, with an overbought reading down here on the RSI, followed by another overbought reading. So let's zoom in real tight, and that's what gives you that negative divergence, and we just now hit it. So overbought in itself usually results in a correction or pullback, if not immediately, somewhat shortly afterwards. But it's these divergence, especially when you have that clean separation right there. You have a clean, distinct peak followed by a trough and another peak. Now, technically, we don't have the peak yet. This is a momentum indicator. It's turning up. It's still pointing up. RSI has rolled down and pulled back a little bit. But if we get that bearish crossover, which looks like maybe coming, the PPO is starting to flatten out, we will have confirmed divergence. And there are no absolutes with this stuff, but you can see back here, I want to point this out. We did have an overbought reading, and this was very unusual. We had an overbought reading there, followed by a higher overbought reading. So that is not divergence, at least not on the RSI. You had higher highs in the RSI, higher highs in prices. You still got a correction because you had that the PPO divergence there. But what happened here? Remember, this, and this were fresh off the heels of that 36% plunge, biggest drop in many years in the S&P 500, in decades, that is. And it came on, or it was followed by the nuclear option with the Fed. So this was a strong market. Again, you had corrections in there. There were tradable corrections, no doubt, but we didn't even have that negative divergence like we do now. The last time we roll back here, these are the last times you had negative divergence after overbought conditions here. First was the that 36% drop. You had one there, followed by a drop. Again, these were double digit or close to it, tradable corrections right there. That one was close. You had the PPO divergence there. So that I wanted to point out. Let's look at QQQ real quick. Jump over to this board here, and we've had divergence building, and what we have now is from this peak here, we've had divergence building for many months, about a year now on the daily chart of QQQ, and that even shows better when you see divergence building for a year or so. Then you want to look at the weekly chart, and you can see it there. Big divergences building on the weekly, and every so often, every year, every couple years, you get that. And then you get some decent corrections. It doesn't look like much here because I'm using log scaling. The bottom number here being $35, and up here you have a range of about almost 400. But those were significant drops, most of those double digits as well. So that's what we're looking at. No hard sell signals. I mentioned that. Let me look at the futures real quick for you. Just go to the 60-minute chart here. This is QQQ 60-minute chart. Here's your primary trend line. Let me turn these off. Find the price bars. I thought I had those tuned down. There we go. Put those so they're not taken away from the picture here. There's our uptrend line, our primary uptrend line on the 60-minute chart. That uptrend line comes off these mid-May lows. You had a divergent low right here, equal or slightly lower low, and there's our primary uptrend line. This was the secondary trend line I have. You can move it around. I'm not crazy about it because there's not a lot of reactions, but let's just put it right there because now we have, if you zoom in nice and tight, you have 1, 2, 3, and now 4 reactions. We bounced off it a little today. So break of that should bring us down here to this trend line, and then a break of that trend line, of course, would trigger a much deeper correction. If you're looking at QQQ targets, I'd say a good swing target is right around here, about 342.37. That would be a drop of roughly 4%. And again, that's an initial target there. There's certainly additional targets if we can get some traction going on the downside. And SPY 60-minute, haven't updated this one in a while, but that would be my uptrend line right there, something along these lines, these divergences like that. Look at this extreme overbought condition. But let's look at the futures. That's what I really like to keep an eye on the 60-minute time frame. So let's start with, let's go over here and start with NQ. All right, so there's that same primary uptrend line on the 60-minute chart right here, that thicker white line that I just overlapped, and there's that minor trend line. So that's comparable to what I just gave you on QQQ, and we need to break that. That should take us down there to the trend line. You have a little bit of minor price support as well, and once that goes, so there's your big level. If you want a hard number, 14,478 or so should do the trick, because that'll take us below that minor support right here and the trend line, and then these are all potential targets. This would be that minimum swing target comparable to the one I gave you on QQQ, which was about 4% below. Yeah, you can see that's also about 4% below on NQ, and that's 14,066, give or take there. And then, of course, the additional potential targets I've been highlighting for weeks down there. Let's look at ES, S&P 500. There's that near-term uptrend line on ES, the 60-minute chart of the S&P 500 futures, and we're moving impulsively lower today. So I think we'll continue down. These are all potential targets that I have marked down here, and what you can see here is a extreme overbought conditions right here. That level I have this line at, I'm trying to grab a circle tool, bear with me, 81.65. We just tapped that, and then we put in a divergent high. We put a slightly higher high after that, negative divergence, and we're starting to move impulsively lower. The last time we hit that level on the 60-minute chart was right here, and you can see what happened. That was followed by a drop of about about 5%. Again, the last time we hit this 81.65 extreme level on the RSI. So that's what it looks like, and so far pretty impulsive selling. That's the biggest down day we've had in a while. You can see by looking at these candlesticks here, and so we'll call that a sell signal. It's not the it's not the best defined trend line I had, but this market has been walking up on low volume and low volatility for a while now, and sometimes that's all it takes is a minor break like that. We'll look at the small caps and we'll move on to the rest of the stuff. So these were the targets I laid out recently on the small caps. I had support here at about 22.99, we'll call it. That was we had a 6 save right here. Intra-period 60-minute drops below, but we closed back above it, tested, and then we broke it today. Again, these are the same levels highlighted the last week and I believe the week before. So there's our breakdown. It was impulsive, right on to that first target, 2261.50. And we had a little reaction. We traded on it for a little bit today, and now we've taken it out, which should open the door unless we get another stick save, meaning a close back above here, that 2261.50-ish level. That should open the door to that next target I have down there at 2207. Again, that's RTY small cap futures, and you can correlate those with the IWM chart. Just look at this reaction low here from mid-June. And here's Tesla, crowd favorite. Beloved stock, but I've had some pretty aggressive downside targets on this one for a while. We had a sell signal way back here right after the fourth quarter earnings and divergent high. We've been moving lower. We hit this trend line there. That was our primary uptrend line there. Held it for a while, broke below it, and then most recently hit this 536.38 support right there. and rallied up. So now what I'm watching on Tesla, I still, think we're going to see more downside in the stock to come. This minor uptrend line right here. So if and when that goes, that should take us down. We reversed just shy of my 536, 38-ish target right there, and I think if we break that trend line, that's going to take us down there. Next stop, 464, 66, and my if things get ugly target, which I think has a decent chance of being hit in the coming months, that's all the way down to 334.50. Yes, that's an aggressive target. That would, even from where we're at right now, wipe out another 50%, nearly 50% of the market cap in that stock. And off the high, that would represent a drop about 62%. First things first, support is support until unless broken, so that's that little minor trend line right there, and then a break of that 536 target, although I'd expect a reaction there. It's hard to say because this one came very close. That could count as the initial reaction off the tag at that level, even though we reversed just slightly above it. So I'd put almost equal odds that we go on down through it and hit that 464, we'll call it 465 level if you're trying to swing trade Tesla or manage any options around it. Another one I wanted to look at, not a stock, but the sector, financials. Okay, this is, was a large part of figuring we might have seen a top in the S&P 500 a couple weeks ago when this broke down. What happened is, as I mentioned, tech took the baton, whereas the financials were leading and industrials, they were strong. They broke down, but as they were correcting and still are, tech was rallying where it had underperformed before. So we need to see tech break. And if tech breaks, and XLF continues lower, as I suspect it will. So just to kind of recap, there was our primary uptrend line. So this was our sell signal right here several weeks ago. We went down, we hit my first target almost to the button. Ever so slight momentum fueled overshoot. 35, 33, bounced as expected. An initial tag of a target from above, a support level, will often produce a reaction. And now we're moving impulsively lower today. Nothing big, but about a 2% drop. And so that's it. We need to break this level. We need to break those recent lows. Call it 35 if you want to be safe. In the fact that we already hit it once, I suspect we'll go through it on the next test of it. And that should take us to my next target. It's about 32.83. And then before all said and done, I'm looking for 31.35 and possibly, if things get really ugly, 28.88. So those are potential targets. We'll just have to see how the charts evolve from here going forward. But so far, it appears to me that this was just the first leg down in a corrective wave, first leg up, called an A, even if you're just looking for an ABC corrective wave, for your Elliott wavers, that should take us down to my T2 with an A down, B up, C down corrective wave. And KRE are your regional banks. I said you usually get more bang for your buck shorting the regional banks versus the big mega banks. Down 3% today. Story on that one, we broke down here. Went on, hit this first target of 63.75, bounced as expected, but we're back to it already. In fact, we're starting to crack a little below it. In fact, we already hit it once. It's a pretty good support level. You can see all these reactions right here. And if and when we take it out, what it's going to do, it's going to put everybody that bought here for months, going back into February, they're underwater, and that's how technical analysis works. You have a lot of people that bought the top, and don't just take my word for it. That's what the volume price histogram will show us. We turn that up, and it shows you the volume at each price, and you can see here this means a lot of people have bought KRE, the regional bank ETF, between 63.75 or so, where I have my line, up to the recent highs. So all these people will be trapped or underwater, and so what happens, some of them will have stops automatically, others may not have stops, but they're going to start feeling the pain. For months they've been going sideways, not making any money, and when they start losing money, going red, that's where they sell, and that's how this stuff works. And it's these divergences that tell me that will be the most likely outcome. Now, what I mean by that, it's a trading range, and with pop it to the upside, yeah, that would be bullish, and that would change things. But as of now, based on the divergences and everything, I'm favoring a downside move, and that is KRE. And obviously, if the regional banks are falling, I think it's safe to assume that the bigger banks will be going down as well. So let's just put that back where it was and move on to the next one. Okay, I'm still liking gold at this time, both longer term and near term. This was my buy zone from way back here when we top, get out, divergences, everything else. A lot of reasons on the charts to get out, sidestep this multi-month correction, which I still view as a bull market correction. And right to the bottom of our buy zone, we had several opportunities to buy there. And then most recently, we hit the top of the buy zone, and that I mentioned is another objective level to step in and buy. You still have the primary trend line just below, or this trend line. It might not be a bull market trend line. We'd have to look at the weekly chart, but that trend line there. So lots of support on gold. PPO cross turning up. Look at that, making a bullish crossover. For the life of me, I don't know why when I click on this circle tool, half the time it doesn't take. But this is when you want to be stepping in and buy these bullish crossovers. That usually is an inflection point, a trend change in gold. So as you can see, as I go back and circle some of those are good. So still liking gold. Gold futures, GC. This is a 60-minute chart. Remember, we had this bullish falling wedge pattern defined by this downtrend line and these divergence lines right here. Positive divergence breakout. This was a R1, more of a zone, resistance zone. And then T1 was hit right here recently, and we pulled back to the top of that R1 zone, or the bottom of the R1 zone, and there's an uptrend line here. So if we can reverse today, we'll stay above or on this trend line, and that should take us up to T2. So look, I think there was a pullback in gold. Let me make sure that chart's up to date because I'm showing it green. Yeah, okay, we're still up 0.48% on the day, and it looks objective to me right here at support. It's about 71.90 right now, 71.92. Very objective entry, new entry or add-on or a buyback for a swing up to my second or even third target. I'm really preferring at least this T3 level right now, and quite possibly more. I laid out the case. This may be the start of the next leg up in gold. So at this point in time, unless anything changes, I remain near-term and longer-term bullish on gold. Silver and GDX, we'll look at those real quick. Let's do silver on the ETF. I know a lot of you guys and gals out there trade ETFs instead of futures. And which board do I want to use? We'll use this one. All right, this is it. We have some support. It's not a great support level because it's been traded through. It's about $24, but it is support on silver. And most importantly, silver tends to follow gold. When do you want to buy a security like silver in a bull market? Well, you want to buy it when it's down, when it's oversold. Down here on that blue line, it's 30. Look what happens if you come in and you buy oversold or near oversold reading. You bought here, then you bought here. Recently, you can buy right here. You bought it right here, so you can go back in time. You decide if you want to be going long or short when you come down to this oversold level, especially in a bull trend. And as history shows, you want to be going long. So there's a case, especially for a longer-term investor for silver. Let's look at the U.S. dollar. We can look at DOL. Let's see, Oh no, USDOL. That's what it is. USDOLR dollar index. And what I have here, recently was looking for a bounce, warning of gold, likely correction gold because we had divergences in the dollar index, both dollar futures and this dollar index right here, and we got it. We got a bounce, and that was right up to this resistance level. That is about on the dollar index about 11,926.40 right there. We hit it once, pulled back. We hit it again. That is resistance, and if they take it out, that's going to be if they can take it out with conviction. I don't have my next resistance level at about 12,137. However, I think this may be the end of the run. We almost have divergence. We're definitely overbought right here, and the dollar is in a downtrend. So just like you want to buy securities that are in a primary uptrend when they're oversold, you want to sell or short securities that are in a downtrend. Here's the dollar clearly in a downtrend, right? When it's overbought above this red line, at or above the red line, like you did right here. If you shorted the dollar, you did good. If you shorted it right here on this overbought reading, you did good. If you shorted it here, you might have gotten a hair early, but you barely went underwater, and then you did good. Divergence, overbought, etc. And this was actually a bull trend right here, but it still worked. All right, so that's that. And the reason gold's kind of stalling out a little bit today is this snapback rally in the dollar futures. This is DX 60-minute chart, U.S. dollar futures, and there's a bearish rising wedge pattern. That just like this was the case to be long, the dollar or short gold right here, and we had the bullish falling wedge on the dollar, and that was the rally that we got. And then that rally, I believe, ended here with this divergent high in the bearish rising wedge pattern, confirmed with a sell signal or broke down. It's a little snapback rally we're almost back testing now. And even if we happen to pop that line a little bit, look what's going to happen. We're still going to have the negative divergence in place. So any marginal new high on the dollar index will still be a divergent high. I don't even think it'll get there. And if it does, we're talking a small percentage. So I think gold is still looking good here. I think the dollar is going to continue down and come on back down, and maybe even take another primary leg down. But for now, let's just say near term, looking for more downside in the dollar. Okay, where the wheat trade got whacked on the gap down today, our lumber trade made up for more than that. Right now, lumber's up 5.13%. Like I said, one of my favorite trades lately, a lot of upside. This had a 60% correction off the top. Probably came as a surprise to a lot of people, but I warned of that for many months. When you go parabolic in lumber, it is followed by a near vertical drop, a very powerful drop, but 60% is on the higher end of the average range of usually about 55% drops, maybe 60%. So the case to be long lumber. Still there, and we broke out Friday. It wasn't very impulsive, but it was a breakout, and we held it. And then we had some impulsive buying today. Again, up. I don't know if you can make it out here on the very bottom, 5.13%. We're almost to that first target. I shared you my thoughts. Reactions likely, but at this point in time, I favor a continued move up to at least T2 at 934, and I still think unless the financial markets just really melt down, the stock market, crude oil, and all that, and I don't see it right now in the charts. It's possible, and if that happens, that may foil lumber getting up here to my T3, third target. But if we get it, that's going to be about a 55% run, not from the lows, just from the breakout point on Friday. About a 55% gain in lumber futures, and that's gonna be be a very profitable trade. Unfortunately, again, I've mentioned this. I don't believe there is an ETF out there, an ETN that directly tracks lumber future prices. Just wood and cut, which are timber and forestry companies, and they often move with this, but not directly because they are individual stocks. They are not lumber futures. So that's why I'm sharing this one. This is my preferred proxy right now. And then wheat, I don't know, there must have been some weather-related news or something with the crops. This was unusual. We had a beautiful bullish falling wedge breakout. It was impulsive, everything you want to see. We hit the first target. We were almost halfway up to my second target. Reverse, back tested on Friday, but then, as futures do, they shut down for the weekend, and this one gapped down. So an active trader would have most likely been stopped out today. But I mentioned for a longer term trader, I believe this one we probably are lock limit down because it's down 5%, 5.3. And either way, you have some you're very oversold right here. And so you can see, as I mentioned this morning in the chart, the last times we were oversold, I'm going to circle. It's right now, today, where we're at, right here. And there was a nice rally right there. We were oversold right here. You got a nice rally out of that. And that was it. So you can see every other time, at least in recent months, that we were this oversold. We're even more oversold today than we were at those 2 points back there. And those both came during a downtrend as well. There were tradable bounces. That's my point. So if you got caught off guard on the gap down, you may want to hold tight, give it a little more room, and see if we can get a bounce tomorrow. Then buyers may step back in. And of course, there's still some support on the longer term daily chart of wheat as well. And I mentioned crude oil today. I believe that's an objective short. I've been highlighting these divergences for a while. We had a decent sell signal there, nothing much, but what happened, we back tested the wedge from below. The divergence continued to build, but what's different this time, we're seeing impulsive selling. So we were here earlier today. I screenshot, I mentioned, I believe it's an objective short. Like I said, I couldn't give you a hard sell signal because I didn't have I'd love to see a very well-defined trend line. I can play with some lines here, but I'm forcing it a little bit, and I don't like to force trend lines. That's why I don't have an uptrend line under there. You can have a little minor trend line there, if I draw right here, and that was taken out. But either way, we're almost to my first target now, 72, we'll call it 72.50. It says 72.49 there. Remember, these are unadjusted targets. They're the actual support levels. That's a minimum target. But based on these divergences, I think we can get a lot more. Plus, 4th of July is over now. This is, gas prices usually go up. There's a lot of people driving, a lot of planes flying into, 4th of July weekend. So, holiday weekend, and then that tapers off. So seasonally, that would also mesh with more downside. So there's T2, 70.48, T3, 66.61, and I think that's a nice swing target right now. So that still gives you another, from where we're at right now, roughly almost 9% more downside to that T3 level. And that is crude. As I mentioned, you can if you don't trade futures, you can short USO. USO is one of several ETNs. You can short that. And I've also made the case, let's not forget, I've made the case on the longer term charts for a major top in crude oil. Just a lot like lumber prices, where crude tends to have these strong runs, and then you put in a big divergent here, negative divergence. So there is the potential for a much larger trade. So I want to just throw that out there. When I highlight these 60-minute charts, this little seemingly, minor drop right now so far could mark the beginning of a much larger correction in crude oil. So if you don't want to, you might want to just, trail stops down instead of booking profits at T2 or T3 on that crude futures. And if you don't short, you can buy SCO. It's I believe it's 2 times short crude oil ETN. This is a daily chart. And there's, you can see a downtrend line. You're going to have decay in these leverage ETNs. So I trust the chart of CL better, or USO better, and crude futures. But that's what it looks like. I don't have any targets for you now, so you would want to just probably align those targets I gave you on CL and USO. But I think probably come up here. Well, let's just say right there would be your first target, about 2161, and that's about 17 or so percent upside on SCO. And finally, as I said, I'll do another update on AMC. This one on I'll give it to the apes. That was a stick save on Friday. Remember, we broke this triangle pattern right here. That was sell signal number 1 right here on Thursday. And then as I was doing the video on Friday, we were below that 51.22 level by quite a bit. But this is what you call a stick save. Zoom in real tight. These lines are distorting here. I think you can make out that candle. We were down quite a ways below that 51.22 and then rallied it to close right above it at the end of day Friday. So that is what you call a stick save. That candlestick printed back above support, and that remains the same. We got to break 51.22, especially on a daily closing basis, a solid close below, and that should open the door to that 36.01. Really, again, it's a little bit perplexing that they've held it up this long. Usually you don't see a stock after a big run-up consolidate for so long and not either break up for the next leg up or break down. But that's what's happening. And again, I favor the downside for many reasons, but nothing's set in stone. But again, you're going to need to see this one take out 51.22 with conviction. $36 your first target, then the uptrend line, then 20, we'll call it $20. And let's just leave it there, and I'll do an update if it starts to play out. And that is it. Let me see. It covered the markets, Tesla, financials, gold, the dollar, silver, GDX, lumber, wheat, crude, AMC. Yep, hit on everything I wanted to. So we'll wrap it up here. And if I see anything else that stands out by the end of the day, I'll do one more video or send out some charts for you. Otherwise, we'll pick it up again tomorrow. This has been Randy Finney with Right Side of the Chart. Have a great day.